Hey everybody, it's Jordan Cameron back with another video today. Guys, we're going to continue to talk about what we kind of stemmed talking about last video, which is the biggest blow off top for crypto before the biggest bubble crash of crypto that crypto has ever seen. All right, so let's jump on into it. So right now what we're seeing, guys, is if we go over here to Bitcoin being at its 50-week moving average, we are indeed seeing Bitcoin bounce off its 50 moving average band. And what we discussed the last few videos is each time we've seen Bitcoin come back to this 50 moving average band, we've seen that be the lows for Bitcoin, right? Over here in September of 2023, right over here in August of 2024, and here we are again over here in March of 2025. Now, we expect this to be the low if Bitcoin's going to continue up in a bull market. And this is all going to tie together in why we believe that Bitcoin and the crypto market in general could go up to this 10 trillion market cap point before a huge crash. All right. So not only is Bitcoin seeing a small bounce off its 50-week moving average band, but we're also seeing the total market cap chart also bounce off, if we zoom in here, it's 50 moving average. And we know that's not only Bitcoin, but also the total market cap of crypto. Each time we've seen it come back down to its 50 moving average, we've seen that be the lows of the correction. September 2023, September 2024, and here we are again right now, seeing it bounce off that 50 moving average for total market cap. All right, now, we're seeing a lot of things happening that we wanted to see for this potentially to start. Now, by any means, guys, does this mean that we have to just instantly V-shape recover and bounce all the way up to the 10 trillion market cap? This is a more long-term outlook, and this could actually take a few weeks to still continue to play out. But we're going to put a bunch of things together here, including global liquidity and how we are currently seeing Bitcoin catch up to the current time frame where we're expecting Bitcoin and cryptocurrency to follow the global liquidity cycle, which has been going up for the last few months. And we know that Bitcoin has a slight lag behind that global liquidity. And we're also seeing a rejection over here on the stablecoin dominance chart, which correlates perfectly with crypto getting that move up to a potentially $10 trillion point. So let's real quick discuss why we could think that the total market cap, once again, could get up to that 10 trillion point. Now, where we took from last video was we took the Fibonacci from our January 2018 high to our November 2018 low. That 4236 extension gets you right up to that 4236 extension, which was about 3 trillion over here in 2021. If we did that same extension point from our November 2021 high to our FTX low, that 4236 extension gets us up to that 10 trillion mark. And also, if you just for a little bit of confluence sake, just say that's not the only thing that's up there. If we took the 2018 high, or I guess it's technically the 2018 high, and then the two 2021 highs, and we do a simple trend line here on the logarithmic chart, that gets you almost right exactly to that 4236 level, right? Now, what I believe is going to happen here, and we could totally be wrong about this, guys. This could break the 50-week moving average and just tumble down, and that could be the start of the bear market. We'll have to change our mind there. But what I believe is going to happen, and just to give you a little background, is crypto is about to see the biggest move that it's ever seen, market cap-wise. Not percentage-wise, but market cap-wise, from this current point to about that 10 trillion point, where everyone and their mother will believe that crypto will change the world. The cryptocurrency, blockchain is going to be the future. And though I do believe that blockchain and cryptocurrency will have a point in the future where it will change the world. Well, it will be almost like an internet-like sensation where it's widely used and it becomes just a normal thing in the markets. I do believe that we're going to see a sort of a bubble phase, kind of like the internet had in the 2000s, before it becomes more mainstream, before it becomes what the internet is for the payment system. All right. So let's put this together. Why could this happen? Well, a couple different things. All right, we just look at the confluence of last cycle at the 4236 fib and also the trend line that's coming up here. But let's look at a few other charts. Last video, we discussed stablecoin dominance. Now, what this chart is, if you guys just look at the top here, you can see that it is USDT dominance plus USDC dominance. What that means is that is the total dominance that of the stablecoin market for the whole cryptocurrency market. So right now, the stablecoin market is 7.21% of the cryptocurrency market. Okay. Now, what we discussed last video, and you already seen it kind of playing out now, is we discussed that this about 8% mark was a huge resistance. And this is what I believe is forming some type of giant Wyckoff accumulation structure. Now, once again, what is a Wyckoff accumulation structure, guys? It is a giant range. It doesn't have to be a giant range. It could be a small range of any time frame. But for this standpoint, we'll look at the daily time frame. It is 3 hits of a low, okay? 2 lows. And what I particularly like to see is 2 lows and then a third hit to the low that actually takes out those 2 lows. And why could this happen? Well, first of all, this 8% mark, we've seen 1 rejection here in August of 2021. We've seen 2 rejections here in 2022. We saw a rejection here in 2023. We saw a rejection here in 2024. And you guys can see last video, we were actually pretty close to this trend, this lineup here. Close to 8%, you guys can see now that we currently are rejecting off that level, right? Where a lot of people thought, the cryptocurrency market was going to go much lower, and I guess it still could. But you guys can see that we are currently rejecting from that 8% level, where you always have to respect resistance as resistance. So how this all ties together is I believe that this move right here from the stablecoin dominance chart, okay, this rejection down to this low will be the move, okay? Because we know that crypto is inversely correlated to the stablecoin dominance chart. Stablecoin dominance goes down, and I believe that that will be the correlation of total market cap getting this move up to the top of the wedge. Before, what inevitably what I think will happen is this just being a giant accumulation range before this actually pushes up here, okay? Which inversely would mean crypto would go down here, okay? And that is why I have this chart labeled of this giant rally up to 10 trillion, everyone and their mother up here saying crypto will change the world before inevitably the dot-com bubble 2.0, which I guess would be coined the crypto bubble 1.0, before only the strong projects survive down here, and you have the actual real rally later in the decade. All right. Now, what else? How else could we look at this? How could we get this move up to 10 trillion? Right? How could we possibly do that? Well, we already have the chart, right? And I'm a big believer of respecting the charts until the charts don't work. News is news, guys. So right now, what you have is you're going to look at this chart and say this is ridiculous, right? Why? Because the markets are down, right? We got bad news. We got Trump, crashing the markets with tariffs. We got crypto good news, which is not pumping up price, right? But you should know, and we talked about a little bit about this last video as well, is that good news does not typically pump price, and good news actually typically comes at highs. And when you get that bad news into points where you typically have bounced from the past, that's typically where you see lows. Is when you get that bad news and everyone and their mother turning bearish, and the fear and greed index at extreme fear is typically where you see those reversals. All right. So how we could see this, and not only have we looked at charts like stablecoin dominance going down to new lows, okay, forming what would be a Wyckoff accumulation structure before a bigger bear market ensues, but we can actually go over here to 2 videos ago where we talked about Bitcoin and the global liquidity. If we go over here to Bitcoin and the global liquidity, we know just based on the past, and we've talked about this for years, is Bitcoin typically follows global liquidity, okay? And we've been focusing a lot on this in the last year or so. It is with a lag though, all right? And go back to 2 videos ago, we went more into depth with this, but global liquidity, right? And this is about a 2-month interval. So we basically took global liquidity and put it 2 months forward, okay, 2 months backwards to try to predict where Bitcoin could go. And you actually look, when global liquidity goes down, Bitcoin goes down. When global liquidity goes up, Bitcoin goes up. When global liquidity goes down, Bitcoin goes down. When global liquidity goes up, Bitcoin goes up, right? Very, very correlated. And we can actually see that we're coming up to that time frame now. When we talked about the end of March being around that time frame where we could start to see Bitcoin start to climb up the ranks. And actually, if you look at global liquidity is all the way back up to those previous highs that we put over here in December, okay? But Bitcoin has not followed yet. So what could kickstart a move like this, where you're looking at it saying there's no possible way that could happen? If you go over here to the Bitcoin chart and look at how Bitcoin's followed global liquidity and thinking that global liquidity has gotten this move to the highs, but we have not seen Bitcoin follow yet because it has been too early, we could say if Bitcoin does start to follow global liquidity, that would be the kicker to get this total market cap really rocking and rolling towards that 4236 Fibonacci up there at $10.4 trillion. And when you put that together and you kind of put all the clues here together, guys, it makes a lot of sense. Bitcoin yet to follow global liquidity up. But we know now, looking back at it in hindsight, that it does lag. But we are at that time frame where it does start to push up within these next few weeks. When we look at stablecoin dominance, hitting that 8% level. But we do know it could push up a little bit higher to 8%, 9%. But ultimately, even if it does push a little bit higher, maybe Bitcoin goes back and tests those 50-week moving averages again. That would be totally normal. You did that last 2 pullbacks. But ultimately, this move down from this major resistance point over the history of stablecoin dominance, even back down to the range lows, but I believe it will take out those lows. This move here to the downside on stablecoin dominance, combined with this move up on global liquidity, combined with total market cap being at its 50-week moving average, which has been the lows of 2024 and 2023, and it's really very significant throughout the history of the cryptocurrency market. I think this is all shaping up to this. All shaping up to this. And I could be totally wrong about this, guys. I could be totally wrong about this. Like I said, there's no guarantees in the crypto markets. The one thing I will say, and the one thing I think people are forgetting, besides the charts, is the crypto 4-year cycle. And how typically in these 2017 and 2021 type runs, here we are 4 years later, and I do believe we're going to get that move that really gets people starting to believe in crypto again. In 2017, you got everyone believing in crypto at the highs. In 2021, really both highs. You had everyone believing in crypto at the highs. I think this cycle, what we've seen is maybe a belief in Bitcoin, maybe a little bit Solana. But what I think we're missing, and I think these charts really point to it, is really that belief in crypto, right? That belief in cryptocurrency. That belief in the utility of crypto. And that one final push, that rock-roaring push, which percentage-wise might not be the biggest, but market cap-wise, gets the most people sucked in. Gets most people believing crypto will change the world. Get your Uncle Bill talking about crypto in here. Get your Uncle Sam talking about your neighbor who plays volleyball in the pool by himself talking about crypto up here. I think we have a lot of things pointing to that, and that will ultimately be what causes the dot-com bubble 2.0. A lot of crazy things happening right now, guys. But I think a lot of exciting things are shaping up. And this is without even looking at individual altcoin charts. This is just looking strictly at the total market cap chart. I think this really will catch a lot of people off guard. The last couple months have really beaten people up. And I think just in the inverse, I also think the second half of this year will also beat a lot of people up. But for the inverse reason of we've got a lot of people giving up on crypto here. A lot of people saying, I'm just done with crypto. It's pointless. I think for the inverse reason of a lot of people gotten beat up throughout this first move up. If you haven't been in Bitcoin, you've been maybe altcoin heavy, you've gotten beat up. I think the inverse will happen very, very soon, where a lot of people will start to believe in crypto again at the wrong time, which is at the highs every single time. The charts are pointing to it. Giant accumulation range, giant range on stablecoin market cap. Charts are pointing to another move down. Bitcoin at the 50-week moving average, getting a bounce again. Total market cap, 50-week moving average, getting a bounce again. Where the 4236 is, perfectly correlating with where that trend line is. We have a lot of things happening right now, guys. A lot of confluence everywhere in the markets. And I hope we can take advantage of this move. All right. So that's the video today, guys. I hope you enjoyed. Tomorrow we're going to talk something, a little bit different tomorrow, and really get into the deep and dirty of, what could move, why I think, certain coins will move better, but ultimately I don't think it's going to really matter where you are as long as you're in the good coins, which I do believe are the utility coins. But we'll talk about that more in depth tomorrow. If you enjoyed today's video, make sure you don't subscribe. I was going to say, make sure you don't subscribe to the channel. Make sure you guys subscribe to the channel. Let me know what you think in the comments section. I love to know what everyone thinks. Everyone can have a different opinion. And that's what makes the markets fun, is everyone has a different opinion, right? So let me know in the comment section below what you think. As always, it's your boy, Jordan Cameron. I'll catch you guys in the next video, which will be tomorrow. Live streams will be back as soon as we get a little bit more action in the markets. We'll be back with some live streams. But right now I'm enjoying making the videos and really digging and deep diving through charts and math and dominance charts and total market cap charts and really looking at, where could this market go? And what's the invalidation points of those theses? I'll catch you guys in tomorrow's video. Later.